The cryptocurrency market is no stranger to volatility. Prices surge and plummet, leaving investors exhilarated one moment and anxious the next. This roller coaster ride is not for the faint of heart. Today, we find ourselves amidst a crypto winter, a period marked by prolonged price declines and a general sense of pessimism. This downturn presents unique challenges to both seasoned investors and newcomers alike. Navigating this crypto winter requires a cool head and a strategic approach. It's a time for reflection, reassessment, and a renewed focus on fundamentals. This isn't just about surviving, it's about positioning yourself to thrive when the market inevitably thaws. A crypto winter refers to a prolonged period of decline in the cryptocurrency market. Prices drop significantly, trading volume diminishes, and investor sentiment turns bearish. This can be triggered by a variety of factors, including regulatory crackdowns, technological setbacks, or a general loss of confidence in the market. The impact of a crypto winter is widespread, affecting individual investors, businesses, and the overall perception of the cryptocurrency industry. Investors experience portfolio losses, projects struggle to secure funding, and the media often paints a bleak picture of the future of crypto. This can be a disconcerting time, especially for those new to the market. However, it's crucial to remember that crypto winters are a natural part of the market cycle. Just like traditional financial markets, the crypto market experiences periods of growth and contraction. These downturns offer valuable opportunities for reflection, learning, and strategic repositioning. Understanding the cyclical nature of the market is essential for long-term success. While the current climate may seem daunting, it also presents a chance to refine your investment strategies, identify undervalued assets, and prepare for the next bull run. By staying informed, adapting to changing market conditions, and maintaining a long-term perspective, you can navigate crypto winters with confidence. Navigating a crypto winter requires a strong emphasis on risk management. The heightened volatility of this period amplifies the potential for losses, making it crucial to protect your investments. It's not about avoiding risk altogether, but about managing it intelligently. A fundamental principle of risk management is to never invest more than you can afford to lose. Cryptocurrencies are still a relatively young asset class, and their value can fluctuate dramatically. Overextending yourself financially can lead to significant stress and financial hardship, especially during a downturn. Another key aspect of risk management is setting clear investment goals and defining your risk tolerance. Are you aiming for short-term gains or long-term growth? What level of loss are you comfortable with? Answering these questions honestly will help you make informed decisions and avoid impulsive actions driven by fear or greed. Implementing stop-loss orders is a practical tool for mitigating losses. These orders automatically sell your assets when the price drops to a predetermined level, limiting your potential downside. While stop-loss orders won't eliminate risk entirely, they can act as a safety net, preventing catastrophic losses. Remember, risk management is not about eliminating risk altogether, but about understanding and controlling it. By implementing sound risk management practices, you can protect your investments and navigate the crypto winter with greater confidence. Diversification is a fundamental principle of investing, and it's especially crucial during a crypto winter. Diversifying your portfolio involves spreading your investments across different assets to reduce your overall risk. This prevents you from being overly exposed to the volatility of any single cryptocurrency. Think of it like this: if you invest all your money in one cryptocurrency and its price plummets, you'll experience a significant loss. However, if you diversify your investments across multiple cryptocurrencies, the impact of one asset's decline is mitigated by the performance of others. Diversification in the crypto space goes beyond just investing in different cryptocurrencies. It also involves exploring various sectors within the crypto ecosystem. Consider investing in projects focused on decentralized finance, DeFi, non-fungible tokens, NFTs, metaverse development, or Web3 infrastructure. Each sector offers unique opportunities and risks. By diversifying across sectors, you can capitalize on the growth potential of the broader crypto market while hedging against risks specific to any single sector. Remember, diversification is not about eliminating risk entirely, but about managing it effectively. By strategically spreading your investments, you can create a more resilient portfolio that can withstand market fluctuations and position you for long-term success. Section 5. Finding diamonds in the rough. Spotting opportunities. While a crypto winter presents challenges, it also unveils unique opportunities for discerning investors. With market exuberance subdued, it's a time to delve into fundamental analysis and identify projects with real potential that might have been overlooked during the bull run. Focus on projects with strong fundamentals. Look beyond hype and flashy marketing. Scrutinize the team behind the project, their experience, and their track record. Analyze the project's technology, its use case, and its potential for real-world impact. Evaluate the project's community engagement, its development roadmap, and its overall transparency. Seek out projects that address real-world problems. Cryptocurrencies are not just about speculation. They have the potential to revolutionize various industries. Look for projects that offer innovative solutions in areas like finance, supply chain management, healthcare, or data security. Pay attention to projects that continue to build and innovate during the downturn. True innovators don't shy away from challenges. They use them as opportunities to refine their products and strengthen their foundations. These are the projects that are likely to emerge stronger when the market recovers. Remember, a crypto winter is a time for due diligence and careful evaluation. By focusing on fundamentals, identifying real-world utility, and observing project behavior during a downturn, you can uncover hidden gems and position yourself for significant gains in the future. Surviving a crypto winter requires more than just theoretical knowledge. It demands practical strategies to navigate the day-to-day challenges of a bear market. Here are some actionable tips to help you weather the storm. Stay informed and adapt your strategy. The crypto market is constantly evolving. Keep abreast of industry news, regulatory changes, and technological advancements. Be willing to adjust your investment strategy based on new information and market conditions. Don't panic sell. Emotional decisions often lead to regrettable outcomes. Avoid making impulsive moves based on fear or FOMO, fear of missing out. Stick to your investment plan and remember that market cycles are a natural part of the journey. Focus on learning and personal growth. A crypto winter is an excellent time to deepen your understanding of the industry. Read books, attend webinars, and engage with the crypto community. The more you learn, the better equipped you'll be to make informed decisions. Consider dollar cost averaging. This strategy involves investing a fixed amount of money at regular intervals regardless of market fluctuations. It helps to average out your purchase price over time, reducing the impact of volatility. Remember, surviving a crypto winter is about staying calm, adapting to changing conditions, and focusing on long-term growth. By implementing these practical tips, you can navigate the downturn with greater resilience and emerge stronger on the other side. Thriving in a crypto winter is about more than just weathering the storm. It's about seizing the opportunities that downturns present. It's about turning challenges into wins by leveraging the unique dynamics of a bear market to your advantage. Refine your investment strategy. A crypto winter offers a chance to reassess your portfolio and refine your investment approach. Analyze your past decisions, identify areas for improvement, and develop a more robust strategy for the future. Seek out undervalued assets. With market sentiment subdued, many promising projects become undervalued. This presents a prime opportunity to acquire assets at a discount, potentially leading to significant gains when the market recovers. Focus on building and innovating. While some projects falter during a downturn, others use this time to solidify their foundations and develop innovative solutions. By identifying and supporting these projects, you can contribute to the long-term growth of the industry. Engage with the community. Crypto winters can foster a sense of camaraderie among community members. Connect with fellow enthusiasts, share knowledge, and support each other. This collective spirit can help you stay motivated and optimistic during challenging times. Remember, thriving in a crypto winter is about embracing the opportunities it presents. By refining your strategies, identifying undervalued assets, supporting innovation, and engaging with the community, you can turn challenges into wins and emerge stronger than ever before. History provides valuable lessons for navigating crypto winters. By examining past market cycles and analyzing the successes and failures of others, we can gain insights to inform our present actions and prepare for future challenges. The 2018 crypto winter, for example, saw Bitcoin's price plummet by over 80% from its all-time high. Many projects folded, and investor sentiment reached a low point. However, those who remained focused on fundamentals, conducted thorough due diligence, and maintained a long-term perspective were able to capitalize on the eventual market recovery. Similarly, the dot-com bubble of the late 1990s offers valuable parallels. While many internet companies failed during the crash, those with strong business models and innovative technologies like Amazon and eBay not only survived but emerged as industry giants. These examples highlight the importance of distinguishing between hype and true value. During periods of market exuberance, it's easy to get caught up in the excitement and overlook fundamental flaws. Crypto winters provide a reality check, separating the wheat from the chaff. By studying past market cycles and analyzing the strategies of successful investors, we can gain valuable insights to navigate the present and prepare for the future. History reminds us that downturns are a natural part of the market cycle and that those who remain focused on fundamentals are often rewarded in the long run. The cryptocurrency market is a dynamic and evolving landscape. Crypto winters are a natural part of this journey, offering both challenges and opportunities. By embracing the cyclical nature of the market, focusing on fundamentals, and applying sound investment principles, you can navigate these downturns with confidence and emerge stronger on the other side. Remember, the crypto space is still in its early stages of development. The technology is constantly evolving, new use cases are emerging, and the global adoption of cryptocurrencies is steadily increasing. While the path forward may not always be smooth, the long-term potential of this industry remains immense. As you navigate the current crypto winter, keep in mind the following key takeaways. Risk management is paramount. Diversification is essential for resilience. Opportunities abound for those who seek them. Learning and adaptation are crucial for success. The crypto journey is a marathon, not a sprint. Embrace the challenges, seize the opportunities, and never lose sight of the transformative potential of cryptocurrencies. The future is bright for those who remain committed to this exciting journey. Thanks for watching, and don't forget to subscribe for more tips.